You ever open up a stock report and your eyes just kind of glaze over? All that jargon, all those charts? Well, today, we're going to decode one of those technical analyses, and we're going to do it fast. Let's jump right in. I mean, it's a wall of charts, numbers, and acronyms that feels like it's designed to be confusing, right? But the good stuff, the valuable info for any investor, is buried in there. So let's crack this thing open together.
So here's the plan. We're going to take a real-world technical analysis and break it down piece by piece. You're going to see not just what it says, but how analysts connect all the dots to get to their final call. Okay, so with any of these reports, you always want to cut right to the chase, don't you? So let's start there. What's the bottom line? What's the final verdict?
And boom, there it is. The verdict is bearish in the short term. So what does that actually mean? It means the analyst thinks the price is heading down and that the stock's in what's called a market correction. The big takeaway? The immediate trend is not looking good.
But, of course, a verdict is only as good as the evidence that backs it up. So, let's put on our detective hats, we're going to retrace the analyst's steps and look at the exact clues that led them to that bearish conclusion. All right, clue number one comes from an indicator that's all about momentum. You know, the speed and direction of the stock's price. It's called the MACD.
Now, I know that name sounds super technical, but the idea behind it is actually pretty simple. Just imagine two race cars on a track. One is the short-term price trend, and the other is the long-term trend. All the MACD does is measure the gap between them to see if momentum is picking up steam or running out of gas.
Okay, and this right here, this is the big moment. The faster MACD line has just dipped below the slower signal line. That's what's known as a bearish crossover, and it's basically a classic red flag that says the stock's upward momentum is hitting the brakes hard.
And for our smoking gun, we look at the MACD histogram. You see those red bars? They measure the exact distance between our two lines. The fact that it's negative, below that zero line, confirms that bearish crossover and tells us that downward momentum is actually picking up. So, clue number one, locked in.
Okay, so we've got our first clue. Now for clue number two. Momentum is one thing, but what about the buyers? Are people enthusiastically jumping in, or are they kind of sitting on the sidelines? This is where we check out the money flow.
It's called the Money Flow Index, or MFI, and it pretty much tells you how much energy is behind a price move. Think of it like the roar of the crowd at a sports game. A big score means lots of excitement and participation. A low score means the stadium's gone quiet.
And the score here? A measly 35.63. I mean, on a scale up to 100, that is a very quiet stadium. It's telling the analyst that there just wasn't much buying pressure at all during the recent price drop. Buyers weren't interested, which just adds more weight to that bearish case.
All right, so let's recap. We've got momentum fading out and practically no buying pressure. The obvious next question is, where could the price go from here? For that, analysts look for key price levels to watch. You can think of them like floors and ceilings in a building. And this number is the one everyone's watching right now. It's a technical level called the lower Bollinger Band, and it often acts as a temporary floor, a support level for the stock. And according to this report, the price is literally knocking on that floor right now. Whether it holds, it breaks could be the trigger for the next big move.
And if we zoom out a bit, here's the bigger price map. You've got your support levels below acting like floors and resistance levels above acting like ceilings. And smack in the middle is the pivot point. These are the lines in the sand that analysts are watching to see if we get a bounce or if the price breaks right through.
Okay, I know all of this is sounding pretty doom and gloom, right? But this is super important. In any analysis, you have to zoom out and look at the bigger picture. A couple of bad days doesn't automatically mean the whole game has changed.
And this is where things get really interesting. While the short-term view is definitely bearish, the analyst is clear that the long-term trend is still positive. But, and this is a big but, that's only true as long as the price stays above a huge long-term marker, the 200-day simple moving average. If it holds that line, this could just be a dip in a much larger uptrend. All right, let's put it all together. The evidence points to a confirmed short-term correction. We've got weak momentum and low buying pressure fueling it. That $327.41 level is the immediate battleground to watch. But, and this is crucial, the long-term positive picture is still intact, at least for now.
And that really brings us to the most important question of all. Technical analysis like this is an amazing tool. It can tell you with pretty good accuracy what is happening with a stock's price. But here's the thing it can't tell you, the why. For that answer, you've got to look at the fundamentals of the company itself, its earnings, its industry, its news. And well, that's a whole other story.
All right, let's jump right in. Today, we're tearing down a technical analysis report on a single stock that's feeling some serious heat. The big question is it about to totally break down or is it getting ready to bounce? Let's see what the data is telling us.
So this is the classic dilemma, right? You're looking at a chart and the trend is clearly down. But is this a falling knife you absolutely shouldn't try to catch, or is it more like a coiled spring, just building up energy for a quick rebound? That's the exact puzzle this analysis is trying to solve.
Now, before we get into all the interesting little details, the report is super clear about the big picture. The main overarching trend here is negative. Let's not mince words. The primary signal is definitely bearish.
And there you have it, straight from the source. The analysis kicks off with that bearish outlook, just flat out saying the trend is down. This is our starting point, our main thesis, and everything else we look at has to be weighed against this. So why so bearish? Well, it really boils down to one of the most powerful forces in the market, momentum. Let's take a look at the key indicator that's basically flashing a huge warning sign. To really get a handle on this momentum, we have to talk about something called the MACD. Now, don't let the name scare you. The easiest way to think of it is just as a momentum gauge for the stock. Is the price speeding up, slowing down, and which way is it heading? That's what the MACD tells us.
And for this particular stock, that momentum gauge is reading a deeply negative minus 12.09. Now, just for some context, anything below zero is considered bearish. But a double-digit negative number like this, that points to a really, really powerful downward force pushing on this stock.
So the takeaway here is pretty clear. A number like that isn't wishy-washy. It's a solid confirmation from our momentum gauge that this downtrend has some serious muscle behind it. This is really the smoking gun for that bearish outlook we saw a minute ago.
Okay, but just when you think it's an open and shut case of a stock in free fall, this is where the story gets really juicy. The charts start sending out some conflicting signals. You know, the plot thickens.
To see these counter signals, we're going to turn to another tool, Bollinger Bands. Just picture two elastic bands, one above and one below the stock's average price. Usually the price likes to stay inside these bands, so when it stretches and touches one, it often snaps back toward the middle, just like a real elastic band.
And boom, here's the signal. The stock's price is stretched all the way down and is now touching that lower elastic band. In trading terms, this lower band often acts as a support level, kind of like a temporary floor where buyers might decide to step in and push the price back up. But that's not the only hint of a potential bounce. The report also looks at something called the Money Flow Index, or MFI. Think of it as a way to measure buying and selling pressure based on both price and volume. For this stock, the MFI is sitting at 53.10, which is, well, it's neutral. Let's talk about why that's a big deal.
What a neutral reading tells us is pretty fascinating. Even as the price has been dropping, there hasn't been a stampede for the exits. Money isn't fleeing the stock in a panic. It suggests investors aren't totally giving up, which kind of strengthens the case that a bottom might be forming.
Okay, so we've got these abstract indicators and gauges. Let's make this concrete. How does all this translate to actual prices on the chart? These are the key levels where the fight between the buyers and sellers is really going to happen.
The easiest way to picture this is as a price ladder. Down at the bottom, you've got support at $185.49. That's the floor the buyers are going to try to defend. Right in the middle is the pivot point at $187.65. Think of that as the balance point. And up top, you have resistance at $190.80, which is the ceiling the sellers are defending.
And that's exactly why these numbers matter so much. They're not just random figures. They're the battlegrounds. Any move above or below these specific levels is going to tell us who's winning this tug of war, the bears trying to push it lower or the bulls looking for that rebound.
So on one hand, we have a powerful bearish trend. On the other, we have some really interesting signs of a potential bounce. So how do we put all these conflicting pieces together to get a final, coherent verdict?
This really lays out the whole conflict perfectly. On one side of the scale, you have the huge weight of that downward momentum, confirmed by that super negative MACD. But on the other side, you've got the price hitting a key support level, that lower Bollinger Band, and it's backed up by a money flow index that shows there's no widespread panic.
And this brings us right to the report's final, nuanced conclusion. It fully acknowledges that main bearish trend, but it absolutely leaves the door open for a twist. It points out that because the price is so stretched to the downside, what analysts call oversold, a short-term bounce is definitely on the table. It's possible.
So in the end, we're left with this bearish trend that has a big bullish question mark hanging right over it. So what happens next? Will that powerful downward momentum win the day and smash through those support levels? Or will these oversold conditions and the lack of panic finally trigger that snapback rally? The technicals have drawn the battle lines. Now it's up to the market to pick a winner.
All right, let's dive right in. In the world of stock trading, you hear a lot of really bold claims, right? Well, today, we're going to put one of those claims under the microscope for the stock TLRY. We're going to break down the technical analysis piece by piece to see if the data actually backs up the hype. So let's not bury the lead. What's the big takeaway from the analysis? A strong bullish breakout. Now, that's not just some throwaway comment. That's a seriously confident prediction of a major move upwards. The real question is it justified?
That really is the million-dollar question, isn't it?
I mean, you can't just make a call like that without some solid evidence to back it up. So let's play detective. We're going to follow the trail of data and see exactly what clues led the analyst to this conclusion.
Okay, first up, we need to read the momentum. You can think of this like checking the accelerator on a car. Is the stock actually picking up speed, or is it just coasting? Let's find out.
So, our first tool for this is something called the MACD. It's basically a speedometer for stock momentum. We're looking at one part of it called the histogram. All you need to know is, if that number is positive, it's a good sign that upward momentum is building.
And here we go, our very first clue. The MACD histogram is coming in at a positive 0.754, so that tells us the engine is definitely revving. Check 1 for the bullish case. So, we've got acceleration. That's great. But is the car just going faster on the same old road? Or is it actually breaking through a barrier and heading somewhere new? That's what we need to confirm next. For that, we turn to Bollinger Bands. Now, the easiest way to think about these is like the lines on a highway. They create a normal trading range, or a road, for the stock price. When the price careens outside of that upper line, well, that's a really big deal. It signals a potential breakout.
And wow, just look at this chart. It couldn't be clearer. The ceiling, that upper Bollinger Band, was sitting at 1260. And the current price? 1394. So it didn't just tap on the ceiling, it has completely smashed right through it.
And to put a number on it, the price is almost 20% above that upper band. This isn't just dipping a toe over the line. It's a confident leap. So that's our second major clue, and it's a big one. Okay, so we're accelerating, and we've broken through a key barrier. But does this whole move have any real power behind it? Is there enough fuel in the tank to keep this thing going? To figure that out, we have to look at buying pressure.
And our tool for this job is the Money Flow Index, or MFI. You can literally think of it as the fuel gauge for this rally. It looks at both price and volume to see how much money is flowing in. The key number here is 70. A reading over 70 is a sign that the tank is pretty full.
And there it is, our third and final clue. The MFI reading is 72.07. It's not just at 70, it's comfortably above it. So this tells us that the breakout is being fueled by some really strong conviction from buyers.
So the breakout seems legit. It's got momentum and fuel. What happens next? Well, now analysts pull out the map and start to chart the road ahead, looking for potential roadblocks and, safety nets along the way.
And they basically map this journey using two really simple ideas, support and resistance. Think of support as a price floor, a level where buyers tend to step in. And resistance? Well, that's the price ceiling, where sellers might show up and slow things down.
So here's that map for TLRY. You can see the price is already blasted past that $13 pivot point. The next potential ceiling analysts are watching is up around $15.49. And if the stock does pull back, there's a potential floor to watch around $11.44.
All right, let's bring this all home. We started with a really bold claim, and we followed the breadcrumbs of the data. So, what's the final verdict when you put it all together?
What did our detective work uncover? 3 incredibly strong pillars holding up this bullish case. First, we saw growing momentum with that positive MACD. The engine is revving. Second, we got a confirmed breakout. The price is way above its normal highway. And third, we saw strong buying pressure with the high MFI. The fuel tank is full.
It all comes back to this one powerful summary right from the source material itself. The breakout is supported by volume and momentum. Every single piece of data we just looked at points in exactly the same direction. It creates this really cohesive and frankly compelling story.
But this all leads us to the ultimate question, doesn't it? The technical analysis gives us an incredible roadmap. It can tell us when all the signals are flashing green. But even when every single indicator signals go, does the market always listen? And that, right there, is the million-dollar question.
All right, today we're jumping into the story of a stock that's given off some seriously mixed signals. I mean, on one hand, you've got this absolutely explosive momentum, but on the other, there are warning signs flashing bright red. So we're going to tear apart the data and figure out what's really going on here. Let's get right to it. So let's start with this question. What actually happens when a stock's price goes parabolic? You hear that term tossed around a lot, right? It's meant to describe a price chart that just seems to defy gravity. And that's exactly the phenomenon we are unpacking today.
First up, we really need to get a handle on the nature of this move. We are talking about a seriously dramatic, almost vertical climb that has pretty much grabbed everyone's attention.
So here's the key thing to understand. A parabolic move isn't just a stock going up, it's an acceleration. It's when the price starts moving further and faster every single day, creating this curve that looks just like a rocket launch. It's almost always fueled by a frenzy of buying, and, well, that's exactly what the data is telling us is happening here.
Okay, so now let's dig into the technical indicators that are just screaming bullish. These are the specific data points that tell us this isn't some random fluke. There's some real powerful momentum driving this thing higher.
Our first piece of evidence comes from the MACD. Now, you can basically think of this thing as a momentumometer for a stock. It helps traders see not just which way the trend is headed, but how much power is behind that move.
And for this stock, the reading is, wow, it's crystal clear. The MACD isn't just positive, it's flying high above its own trigger line or signal line. In the world of technical analysis, this is a textbook, flashing green light confirmation of a powerful, ongoing bullish trend. There's really no gray area here. The momentum is undeniably strong.
Next up, we've got the Money Flow Index, or MFI. Now, this one is really interesting because it goes a step beyond just looking at price. It actually factors in the trading volume to get a read on the buying and selling pressure. It's kind of like a gauge of market psychology. Is the crowd rushing in to buy, or are they quietly heading for the exits?
And just look at this number, 94.89. You have to understand, on a scale of 0 to 100, that is incredibly high. Anything over 80 is usually considered overbought, so hitting nearly 95 is just wild. This points to a massive wave of what traders sometimes call panic buying, where everyone is piling in, terrified of missing out on the gains.
And the final piece of the puzzle for the bulls? It's the trading volume. See, the price isn't just rising in a vacuum. It's being backed up by a huge increase in trading activity. And that tells analysts that there's real conviction, real money behind this move, which is usually the sign of a healthy trend.
Okay, so let's recap. So far, the story sounds incredibly bullish, right? All systems go. But this is where things get complicated. Because the very same data that shows all this incredible strength is also flashing some serious warnings that this stock is getting dangerously overheated. Now, to understand this risk, we need to talk about Bollinger Bands. The absolute simplest way to picture these is to think of them as guardrails on a highway. Normally, you expect the stock's price to bounce around somewhere between these upper and lower bands. It's the normal, expected lane of traffic. But look at this. This stock hasn't just touched its upper guardrail, it has completely crashed right through it. The price is trading way up at $6.45, while the upper band, the very edge of its expected range, is all the way down at $5.66. This is a major deviation from the norm.
And this number, 122.14%, really shows you just how extreme this move is. The price has stretched so far beyond its statistical normal range. Think of it like a rubber band being pulled way, way too far. Yeah, it shows incredible strength, but it also warns that the snapback could be sharp and sudden.
So what's the big takeaway from all this conflicting data? We've got this incredibly powerful bullish momentum colliding head-on with a screaming warning of extreme volatility. Let's try to put all the pieces together.
For anyone trying to navigate this, these are the key price levels to keep an eye on. That pivot point at $16.15, that's the main battleground. If the price stays above it, the bulls are still in control, looking towards that resistance at $16.96. But if it breaks below that pivot, the price could easily fall back to that first support level at $15.65. And hey, you'll notice that number is right around where that upper Bollinger Band is.
And honestly, this quote from the source material just perfectly captures the tension here. Explosive bullish. You just can't deny the power of this trend. But that second half of the sentence is the critical warning. The extreme stretch is a huge red flag for high volatility and the risk of a swift, sharp correction. The opportunity is huge, but the risk is right there with it.
And you know, this stock's wild ride leaves us with a much bigger question, one that every single investor has to face at some point. In a market this volatile, when you see this kind of incredible momentum, how do you balance that fear of missing out with the discipline you need to manage extreme risk? Finding that answer, that's often the real key to success.
All right, today we're going to cut right through all the noise. We're not talking opinions, we're not talking predictions, we're talking signals. We're going to unpack a technical analysis for a stock and see what the data itself is telling us about where it could be headed. So let's jump right in. So what's the bottom line here? Well, the overall analysis points to a bullish recovery. Now we're starting with the conclusion because honestly, the most interesting part isn't the what, it's the why. How did they even get here? What signals are pointing to a continued rise? Let's start breaking down the evidence.
Okay, first up, let's talk about momentum. Think of it like a car that's accelerating. You're not just looking at its current speed, you want to know if it's picking up steam or maybe, just maybe, starting to slow down. So what's really driving this stock's price forward? To measure this, analysts use a tool called the MACD. That stands for Moving Average Convergence Divergence. The best way to think about it is like two runners in a race. When the faster runner, which is the MACD line, starts pulling way ahead of the slower runner, the signal line, well, that's a really clear sign of positive momentum.
And here's the data right here. The MACD line is sitting at 7.74, and that is well ahead of the signal line at 4.94. It's just like our faster runner pulling away from the pack. For analysts, this is a classic bullish confirmation. The upward momentum is strong, and that gives us our first big green light.
So momentum is one thing, but we also got to see if actual money is backing up the move. For our next piece of evidence, we're going to follow the cash. Is it flowing into the stock with conviction, or is it kind of slipping out the back door?
To do that, we look at something called the Money Flow Index, or MFI. It's a pretty clever indicator because it uses both the stock's price and its trading volume to measure buying and selling pressure. Basically, it tells us if big money is flowing into a stock or out of it.
And look at that reading, 71.10. Now, in the world of the MFI, any number over 70 is considered a really strong signal of buying pressure. So this tells us that a significant amount of cash is flowing into this stock, which definitely supports the case for this rally to keep going.
Oh, and there's more. The analysis also points out a positive reading from another indicator, the on-balance volume. All this one does is add up the volume on up days and subtract the volume on down days. A positive number, like we have here, just confirms that the buyers are being more aggressive than the sellers. That's another bullish signal. So far, that's 2 for 2. Okay, so we've got strong momentum, we've got strong money flow. The logical next question is, all right, how high can this thing actually go? Because every rally, and I mean every rally, eventually hits a wall. So this part of the analysis explores where those limits might be. For that, analysts turn to a tool called Bollinger Bands. What they do is create this channel around the stock's price, and that channel shows its typical trading range. When the price hits that upper band, it's generally considered expensive compared to its recent past. When it hits the lower band, it's considered cheap. Simple enough, right? And this number just perfectly illustrates the situation. The stock is currently positioned at 98.26% within its Bollinger Bands. That means it's not just touching the upper band, it is practically glued to the ceiling of its expected trading range. It's pushed right up to the absolute edge. So what does that actually mean for us? Well, on one hand, it's proof of just how powerful this rally is. It takes a lot of buying power to push a price that high, but on the other hand, it's a huge warning sign. It's telling us the price is hitting a wall, a point of resistance, right around that $207 mark. And this is where our simple bullish story starts to get a little more complicated.
And that brings us to our final section, a word of caution. Because, no analysis is ever complete without looking at the potential problems, the hurdles that are just up ahead.
This quote from the analysis just sums it up perfectly. Yeah, the rally is strong, but the stock is now what's called overbought. That's just a technical term that means the price has gone up too far too fast, and it might be due for a cool down. And what's really crucial here is that it's getting close to a huge technical barrier, the 200-day simple moving average. A lot of traders watch this exact level, and it often acts as a kind of psychological ceiling for a stock.
So let's put some hard numbers on these hurdles. The ceiling everyone is watching is that resistance level at $209.54. The bulls have to smash through that to keep this party going. And down below, the floor is the support level at $203.60. If the price breaks below that, it's a very strong sign that this rally is running out of gas. So let's put it all together and look at the full picture. On the bullish side, you've got this powerful momentum, and you've got significant money flowing in. But on the caution side, this stock is overbought, it's pushed right up against the top of its range, and it's staring down a major resistance ceiling. It's really a classic case of an unstoppable force meeting an immovable object. And so, that leaves us with the final critical question. You've got all these bullish signals pointing up, but there's a major technical ceiling looming just overhead. The real question now is, which of these incredibly powerful forces is going to win out? Will it be the bullish momentum or that wall resistance? That's the battle everyone is waiting to see play out.
All right, let's dive in. You ever get one of those technical stock reports and just feel like you're trying to read an alien language? Well, today we are cracking the code. We're going to take all that jargon and turn it into something we can actually use.
Yeah, it's a pretty common feeling, right? You open it up and bam, a wall of data. You see all these acronyms, these numbers, and your eyes just kind of glaze over. You know it's supposed to mean something, but what? And that is the big question. Because buried inside all those numbers is a story about where a stock has been, and maybe, just maybe, some clues about where it's headed. So let's figure out what this story is actually telling us.
Okay, so let's just cut right to the chase. What's the bottom line? If you only take one thing away from this whole report, this is it.
There it is. The report's final verdict is strongly bullish. That means all the signs are pointing up. But, the real question is why? What signals in the data are so powerful that they lead to that conclusion? That's what we're about to unpack. So first things first, let's look at the evidence for this bullish case. When analysts want to know if a trend is real, they look at its momentum. You can think of it like this. It's not just about how fast a car is going, but how hard you're pressing the gas pedal. And one of their favorite tools for this is something called the MACD. Now, don't let that crazy name scare you. All it's doing is comparing the short-term trend to the long-term trend to see if things are speeding up or slowing down. It's that simple. Now, the rule of thumb here is super easy. When the MACD line is above the signal line, that's a thumbs up. It's a bullish sign. It means recent momentum is stronger than the older momentum. And as you can see, 0.098 is way above 0.018. The report literally calls this a clear buy signal. And this little bar right here, this confirms it. This positive number shows that the gap between those two lines we just saw is actually getting wider. The foot is pressing harder on the gas pedal. The momentum is building. Okay, so we've got momentum. The car is accelerating. But is anybody actually betting on this car to win the race? That's where trading volume comes in. A price move without volume can be a total fake out. And the answer from the report is a huge, resounding yes. Look at that number, 3.57. That is a monster. It means that on the day of this big move, the trading volume was more than 3.5 times the recent average. That's not a small ripple, that's a tidal wave. And here's why that is so important. High volume is like a massive vote of confidence from the entire market. It says, hey, we see this price move and we believe in it. We're putting our money behind it. It confirms the breakout is legit. So at this point, everything looks amazing, right? We've got strong momentum. We've got huge volume confirming it. It sounds like a slam dunk. But this is where a good analysis gets interesting and adds a little twist. So you have to ask yourself, can a trend be too good? Can the engine get too hot? Well, it turns out the very same data that's screaming go is also flashing a little warning light. So let's start with Bollinger Bands. The easiest way to think about these is like the banks of a river. A stock's price is supposed to flow inside the river. A value of 100% means you're right at the edge of the bank. This stack, it's at over 117%. It's not just at the edge, it's flooding. That shows some seriously extreme pressure. And here's another warning light. The money flow index is basically a gas gauge for buying pressure. Anything over 80 is considered to be in the overbought red zone. We're at almost 90. The buying pressure has been so intense that the tank might be running on fumes. And hey, don't just take my word for it. The report spells it out right here. It says these extreme overbought conditions suggest caution for immediate new entries. So the trend is great, but jumping in right this second might be like trying to hop onto a car that's already going 100 miles an hour. So what on earth do you do with all this? The signals are bullish, but the warning lights are on. Well, luckily the report gives us a roadmap, a set of key price levels to keep an eye on. Just think of these numbers like a little house. Support at $1.60, that's your floor. It's a price where the stock might find its footing and bounce. Resistance up at $1.99, that's your ceiling, a place where it might struggle to break through. And the pivot point, that's the main floor, the balance point for the whole structure. So, let's put it all together. The big picture trend? Absolutely bullish, no question. And the massive volume gives that trend a ton of credibility. But, and this is a big but, the short-term indicators are all flashing overbought, which is exactly why the report advises caution for anyone looking to jump in right this minute. So in the end, we're left with this fascinating puzzle. The long-term engine is roaring go, while the short-term alarms are blinking slow down. And navigating that tension, well, that's what makes this so interesting, isn't it? It really makes you think.